Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Friday, March 20th. The stock market took a breather Thursday that we suspect plenty of participants expected to happen. Two factors came into play for the expected weakness. The first was the understanding that the market was apt to encounter some profit-taking after gaining as much as 20.4% between its low on March 6th and its high on March 18th. The second was the recognition that the rally had left the S&P testing its 50-day simple moving average, which is now 800, which has provided stern resistance during prior rebound tries. The market's bid to clear that key technical hurdle didn't have any convincing support, so the profit-taking efforts picked up and left the market on the defensive for most of Thursday's session. Notably, the S&P financial sector dropped 8%. That's no small move, yet given the scope of its recent gains, the sector had been up as much as 64% since March 6, it was taken in stride by the market as little to be concerned about at this juncture. Today's action will be shaped in part by the quarterly expiration of stock options, index futures, and single stock futures. This activity is likely to lead to some decent-sized trading volume and perhaps some added volatility around the open and close of the session. There isn't a tremendous amount of news this morning that would cause much of a stir in either direction. In turn, there aren't any economic releases today. Fed Chairman Bernanke and FDIC Chairman Baer will be speaking on a panel at 12 o'clock Eastern Time about the financial crisis and community banking. With the latest FOMC action and their prior observations about the crisis, it's unlikely anything will be said that could be considered a true surprise to the market. Today could end up being a relatively unexciting day then, with bulls and bears alike showing some exhaustion and preferring instead to step back and contemplate the market's likely behavior next week. That thought process will leave them deliberating as to whether pullbacks are short and shallow on account of there being a newfound willingness now to buy the dip, or whether the trend of selling into strength with conviction persists. I'm Pat O'Hare for Briefing.com. Thanks for listening.